Great, thank you very much. That was a really tough fun fact to build on. But we do want to just all come up onto the stage. Simon, Oliver, Arthur, Nath. You can introduce yourselves, so I'll pass around the mic. But how's it going, guys? Zebu Live, day one. Bit of vibes. We can have some gasps from the audience. We can have some claps. We're going to have some fun. Future of trading. We've got a star-studded panel here. I'll shut up and let people introduce themselves. So, Simon, over to you.
Good morning. Is it on? Hello. Good. Hey, good morning, everyone. Simon Barnby here from Archax. For those of you that don't know, Archax is a fully FCA-regulated exchange, broker, custodian for all types of digital assets, with a focus on the institutional world and bringing the crypto world and the TradFi world closer together. Great to be here today.
Awesome to have you. Nathan looks like he's having some trouble. You got some mic on?
Is it working? There we go. Hi, yeah, I'm Nathan. I'm from a company called Electric. We're a DEX on a new layer 2 network that uses AI to improve liquidity provision. I've been in crypto for quite a while. I'm Australian, but I'm living in London because I want to make more money, and Australia is quite a small economy. But yeah, I'm excited to be here.
Awesome to have you. Arthur.
Yeah, hey, pleasure to be there. I'm head of sales and business at payment network Mercurio. We do a lot of stuff with DeFi protocols and also been exploring DeFi space probably last 5 years and been building together some products in new payment, like financial infrastructure for the next decade.
Right. Hello, everyone. My name is Oliver. I am CEO and co-founder at Nordark. Nordark offers specialized banking solutions for crypto companies. So it's basically a one-stop financial shop for your crypto business with both fiat accounts as well as crypto trading in the same platform.
Awesome. So yeah, just for context, intro to myself. I'm one of the co-founders of Zebu Live and Flight 3, who's putting on the show today. So appreciate everyone coming out. We are looking to be the first world's blue chip Web3 marketing agency on the Flight 3 side. We're about 150 people across the US, UK, Philippines, and also Africa. So if you ever need some marketing support, please go and check out the booth. Zebu Live, we really are passionate about bringing the future and showcasing the future of Web3. So this is our third edition, hopefully looking to go more international next year, but let's jump into it. So trading, the future of trading. I want to start with like the hottest topic at the moment, AI. Nathan, you and the Electric team doing some cool stuff. Can you maybe expand on where you think AI is going to fit into trading in the future and what you guys have built?
Yeah, for sure. I mean, it's important to start off by explaining that, as everyone knows, AI is the biggest black box ever. No one knows what's going on. The way the machine learning works is it's an iterative process of training a model to achieve one task, but you don't know how the model is going from the input to the output. It's just trained to do the right thing, and if it's wrong, it iterates and learns again. So trading with AI is, one of the most, it's not new. It's been done for the last 30 years. As soon as neural networks came about, everyone tried to optimize trading with AI. It didn't work because generally AIs are quite binary. It's A or B, it's 1 or 0. So what we've done at Electric is we've tried to add in an extra dimension to make the AI predict prices and then give weightings to each possible price. And then what we've done is provide liquidity across the liquidity curve, and it's only possible with liquidity curves not on order books, to say, all right, if the AI, for example, in an ETH DAI pool predicts the price will be 1.5K with a 20% likelihood, 1.51K with a 12% likelihood, and 1.48K with a 8% likelihood, will provide liquidity across the curve at those concentrations, which overcomes the key issue of AI in trading, which is you can now be hedged along the entire curve and be right and wrong simultaneously. So it's all about, generally with AI, it's being right more than you're wrong, and trading as well. But what we've done is predicted it in a sense where we can be wrong and right, and we still make money, or the LPs still make money. So the future of, AI and trading, the biggest innovation I see coming that people have been trying for such a long time, but it's been really hard to pull off, is, it's all about simplifying the trading experience. Because in institutional trading, they've been trying to use AI for the last 20, 30 years. It hasn't worked. It hasn't been successful. People think they have some alpha, and some people have a way that no one's done before. But as soon as you found it out, people can find out what you're doing, and then it's a race to zero. And races to zero always end at zero. So the next thing is simplification, because AI, you're looking at ChatGPT, and AI has been amazing at simplifying the whole process of getting information, drawing upon the collective knowledge of humanity. So what people are trying to do now is create these models where you can describe a trade it goes, for example, I want to buy this one, sell it here, put a stop loss here, and maybe call it, a put call here, whatever. And what the AI model could do is translate that description to a trade structure, and then execute that, whether it be on chain, whether it be through, exchanges like Robinhood, whatever. But the issue is there's always a margin of error that it's going to be wrong, and then who's the culpability on? Who's liable for the mistake? So that's the key issue with where AI is heading in trading. But using the GPT model, people have been speaking about doing it for since last year. No one's done it yet. Anyone who's tried has failed miserably. It's still sort of a big bubble, but it's still just after ChatGPT, like the watershed moment of where AI is starting to really take off. So there's so many more innovations to come. I guess we'll see. But at the moment, there's really no. What we're doing is quite unique. I hope and believe, but there's no real way to use AI in trading unless you have some huge alpha that no one knows about, and eventually that will run out. So it's always about finding the next alpha.
Sorry, I was just going to ask a question, actually, just kind of linking into that, and that is, for many years, algorithmic trading has existed in the traditional world, particularly for, sell-side brokers offering algorithmic trading strategies out to buy-sides. Is AI just going to sort of tweak that and build on that, or how does that kind of evolve?
Yeah, the best way to think about it is AI can optimize, right? So if you're looking at algorithmic trading, there's still errors being made. For example, if you pick algorithms for a market environment that's highly volatile or high volume or positive sentiment, and the market sentiment or volatility or volume changes, then your algorithms are going to be wrong. So a possible use for AI is to use what's called like a meta-heuristic AI, which can control different models or different algorithms at different times. So maybe you have a model which can say if the market's going up, use these data points or these algorithms. If the price is going down, use these data points. If it's high volume, use these. If it's low volume, use these. So you can optimize, but it's just always optimizing. It's not perfecting.
And do you think AI is a bigger win for an individual or an institution? Like, is the democratization, is it better for just like the lay person, or like the bigger financial institutions going to do better from it?
Technology is neither good or bad, right? It just depends on who's using it. So it's not necessarily about, like, democratizing access to technology is a huge opportunity, but I wouldn't say it's inherently better for either party. It's just how someone uses it, right? So an institution who's been, who has a team of AI developers who knows how to properly use and optimize their algorithms, their company, their data with AI will have a huge change. But for your everyday person who's, might be at university, might be at school, might be at a company, who wants to enhance their writing, enhance their thinking, enhance their thought process or mental models with AI, that can be very easily done at an individual level. So it's easier to optimize yourself at an individual level and harder to optimize yourself at an institutional level. But if you have the right assets at the institution, it'll be more of a significant change because you have that extra additional knowledge that most people don't have.
Yeah, that makes sense, and it dovetails nicely into our next question on institutions. For those of you who don't know, Simon at Archax is one of the founders. It's the first regulated exchange in the UK, which is an amazing achievement. But it's really thought amongst lots of people in the Web3 industry that institutional is going to be that next catalyst for the bull run, and that adoption curve is really important. What do you see as the next piece of info, the development that is going to sort of like drive that?
Yeah, it's always that really interesting question there, I think. And I think before answering, you have to unpick it a little bit, because we use some terminology there which, different people interpret in different ways. The word institution, what does that really mean? I think it can mean anyone from a corporate, a business. It can include a big global investment bank. It can be a hedge fund, an asset manager. It can be a professional investor, potentially an individual. So I think institution covers quite. Maybe a better description is non-retail, so it's kind of, professional investors and above, if you like, and corporates included. So I think that's one thing. And then when you sort of talk about digital assets, crypto assets, what do we really mean? Because that's a pretty broad, they're pretty broad terms too. And I think, you kind of need to look at the different types of assets that get covered by that. First off, in a way, blockchain, tokenization, Web3, they're just technologies, really. That's all they are. They're just technologies. And technology allows you to do things differently, and it allows you to do things better. It allows you to do things more efficiently, and it allows you to innovate. One analogy I often use is the music business. When you're an elder statesman on the stage like I am today, we used to buy music on vinyl, then we bought CDs, then we did downloads, then we started streaming it. the way music doesn't really change. Well, genres come and go, but the music is pretty much the same kind of asset. But the way we consume it, the way we pay for it, has completely changed without us almost realizing it. And as well as changing the way we consume it, it allows people to innovate. It's now much easier to make music and get it out there than it was when you had to have a record contract and print vinyl, everything else. So I think, in a way, the financial markets are going through this same thing. We've got traditional financial markets are hugely inefficient, particularly in the post-trade space. And blockchain and tokenization presents a really efficient way to run markets. So then kind of looking at these different things, I mean, in the same way the technology allows you to innovate, I mean, things like cryptocurrencies are clearly new asset types. They're very innovative instruments. But there is the opportunity to really transform traditional financial markets too. So, and we certainly believe that all financial markets will become tokenized and will leverage DLT and blockchain technology. And we're kind of seeing that today. I mean, for example, we work very closely with Aberdeen Asset Management, who are a investor in Archax, and we've recently tokenized their money market fund. Now, their money market fund, if you want to invest in the Aberdeen money market fund, a very traditional instrument, it probably, you would need upwards of $10 million to get involved at a minimum. With us, it's $5,000. So suddenly we've kind of lowered down the barrier to entry very low, and you've got this pretty stable, pretty institutional yield-bearing instrument in digital form. So if you're a hedge fund trading Bitcoin, trading crypto, and you want to go risk off, currently, what do you do with your money? Well, you don't really want to bring it out to the fiat world and hold cash. You probably put it in a stable coin and earn nothing for it. Well, suddenly you've got another instrument at your disposal. You've got a yield-bearing instrument that's pretty stable. There's no, actually, it eliminates bank risk as well. So you're minimizing counterparty risk at the same time. So you've got a pretty interesting, stable instrument. Another type of crypto asset maybe, and something we're working on at the moment is, the yields you can get from ETH staking, for example, are really interesting. But if you're an institutional business, owning ETH, worrying about wallets, holding crypto when maybe you're not allowed to, it's pretty difficult to get exposure to ETH staking. We run validator nodes. We can provide access to staking returns, and we're tokenizing those nodes. So suddenly you have a regulated security instrument with an icing code that looks like a security, trades like a security, but gives you direct exposure to ETH staking. So sort of coming back to your question, when do institutions get involved? Well, there are some institutions involved in crypto already. I think, maybe the alternative, people involved in alternative assets anyway, hedge funds, they're actively involved in crypto, and that's fantastic. I think then when you look at things like, tokenized money market funds, they're more palatable to an institutional audience, so the larger institutions can get involved in those things. These kind of hybrid instruments, like I mentioned, these sort of ETH staking securities, again, that kind of opens up a new potential audience for institutions to get involved. So really, I think the things we've seen so far is the kind of the institutions on the edge who are very open to doing new and different things, getting involved in crypto. But as we see tokenized real-world assets come to the fore, as we see these kind of more regulated type instruments come through, that is when that wall of money from the institutional world can really get involved.
And how it sounds like education is probably a big part of that. Do people believe or know where the yield from a tokenized Ethereum staking validator is coming from, or like how is the education piece at that level?
Well, you're right, they don't. I mean, we've been going for 5 years now, and over that journey, I mean, at the very beginning of it, as soon as you mentioned crypto, everyone thought Bitcoin, drug dealers, money laundering, and that kind of blinkered view does still exist. I mean, it's much better now, and institutions are more open to it. But you're quite right. Not only do institutions, maybe, or many people in institutions not understand ETH staking and yields and all that. But then you think about what's going on in the DeFi world, then that's even more complicated. And then you think about the regulators who are constantly trying to catch up with innovation. So it's complicated. And for institutions to get involved, I mean, they are heavily regulated businesses, and they're not going to touch stuff that isn't regulated in some way or that they understand. So you're right. There are challenges to come on the education side, and there are challenges to come on the regulation side. But I think the exciting thing is particularly with firms like Aberdeen Asset Management getting involved, there is a desire to understand and a desire to change and an acceptance that they can see where the future is, and it's now about how you get there, not what it is.
Yeah, 100%. I think an interesting switch of pace is retail what's got us here. You know, we've sort of come from 2008 all the way on retail money with a bit of institutional. Arthur, I wanted to come over to you from the Mercurio perspective of, you know, where do you see retail trading going in the future, and like what sort of like decentralization, centralization is your perspective?
Yeah, I would say we're excited about, you know, the whole fact of like paradigm change of DeFi. And, you know, DeFi race, I think it's summer 2020, gave us like a lot of good new trading platforms and instruments like Uniswap, the IDX, so people can have access over their funds with a full transparency on blockchain as well, with you know, 24/7 open markets. So automated market making is probably, you know, the biggest innovation in DeFi that we ever seen. So yeah, we're excited about this fact that, you know, users and institutions as well, they can trade efficiently with kind of more transparent way. But, you know, we do believe also that centralized trading, centralized exchanges like Coinbase, like Binance, they can also have, you know, some kind of hybrid mode, and we see it as well. So all of the centralized, you know, exchanges players, they also kind of launching new products like wallets, decentralized wallets, for example. Like Binance has Trust wallets, Coinbase has a Coinbase wallet that you can use for access to NFT platforms, to DeFi marketplaces as well. So the way probably the market grows, and the way we see it at Mercurio, it's like it's probably like, you know, hybrid mode where users can have right now the same technologies on wallets, and they can trade on decentralized exchanges the same way they've been trading on centralized. And we're trying to build these kind of, you know, products from the payment perspective that will enable users to, you know, have a choice and prefer to trade, you know, on decentralized exchange rather than on centralized. So yeah, that's probably our take. And I would say the last but not least thing about DeFi is you know, the way that DeFi make users contribute into the platforms, into the protocols, it's like very unique way. So, for example, the IDX right now, they're launching like fully open source software. So, you know, users and institutions like developers, they can build on top of the IDX, and also users can contribute into the community and, you know, kind of be full-fledged kind of I would say employers of these platforms as well, without you know, having a company. So that's my opinion.
Yeah, and what do people think about decentralization outstripping centralized? Like, is the innovation going to be greater, or where do you think it's going to happen in the future?
Yeah, I think that question often gets asked, doesn't it? Is what's going to win, the centralized exchanges or decentralized exchanges? I think it's probably both. I think there's a place for each. I think some things are better suited to being centralized, and some are much better suited to being decentralized. And I think when you look at kind of institutions getting involved in the decentralized world, again, regulation kicks in. I mean, arguably, a lot of what happens in DeFi should be regulated potentially, and the regulators will look at it at some point. But the challenge with regulation is, you know, regulators like to have someone on the hook. They like some central party that they can say, right, you're regulated, you're in charge, and if something goes wrong, we're going to come and, you know, talk to you about it. And of course, in the decentralized worlds, that's more difficult. So there, you know, I'm not saying it's impossible, but, you know, things have to evolve for those kind of things to get addressed. But hugely exciting.
I think a better way of thinking about it is a centralized environment makes for like a richer founder, and a decentralized environment makes for a poorer founder. So it's a hard one of saying who's going to be building to make less money, right? If you have the philosophy of, okay, privacy comes first, or I want to be decentralized, or, you know, open access or democratization, that's all good, but you won't make as much money as Coinbase would being centralized. Like, inherently, you make more money being centralized, and that's the biggest issue with, you know, if you're trying to look 10 years in the future and say everything trends towards being decentralized, and you know, even hybrid models can exist, but won't exist because it's a harder UX. You know, you know, even with like things like account abstraction for Ethereum and other networks, like they've been trying for 6 years. when Vitalik was creating Ethereum, they were writing about how to, abstract away the accounts and the nature of wallets being so complex. So there will always be these UX issues, and hence you'll always have less users, and hence you'll always make less money. So when you're living in a world that's, where the value of money is so much more than the value of, open access, inherently you're going to have more people working on centralized protocols. And I hate to say it, but it's just like, it's a fact of the world we live in, I think.
And you've got Coinbase as the example there. They also have Base, their L2.
Yeah.
So they kind of sort of two-pronged approach there.
Yeah, I mean, my take on Coinbase is that they saw the future of trading moving away from centralized environments, and they realized that if they went to build a more decentralized environment, they'd make less money. So their backup was to make Base. And if you're looking at Base not as a network, as a investment, they're clearing $220K a week in sequencer fees. And that means that what they're charging users to pay gas versus what they're paying it's called an anchor contract, which can roll up the data and post it onto Ethereum, they're making $220K a week, right? And that's huge. Gradually, and this is just, 3 months they've been around for? 3 months, 4 months? So Coinbase is making a very smart play of saying, cool, we are a trading company, but we're now going to start focusing on technology to support being decentralized. But Base, the chain, is very centralized, like every layer 2 at the moment.
Yeah, 100%.
Hence I make more money.
Always the way. Oliver, coming over to you then. So, a big part of trading, I think, is access. It's one of like the key barriers at the moment. You're working at Nordark to help improve that access. What do you think is going to be like that big wave of adoption that's going to help? Is it software? Is it education? What's going to help businesses get access to crypto and then fundamentally trade?
Yes, so I think this is kind of connected to the previous question. I think that for a retail trader, it is today kind of possible to live on-chain, to do all of your activities on-chain, use a DEX for trading and so on. I don't know a lot of institutional or businesses that use DEXs to trade, for example. And I think that all of these companies sitting next to me are innovating in the trading space. But I think that for businesses to actually access this, I think for it to be quick and for it to be effective, I think there needs to be some kind of wrapper or some kind of interface that will let them access this, maybe a liquidity at first. So for example, a business, instead of going and starting to use a DEX to trade right away, maybe they use Nordark, for example, with aggregated liquidity both from centralized and decentralized exchanges, so that they can access these DEX-traded coins, but from a regulated player. So basically the government's happy because they can come to us and be mad if something happens, and the companies are happy because they can use a regulated player, and kind of stay compliant and with regards to regulation as well.
Yeah, I would agree with Oliver. So for us, let's say for Mercurio as an institution that is a fully compliant and licensed company, it's probably much easier to trade on user liquidity from Coinbase or from centralized exchange that also has a license that has some kind of relationship with regulators. So for us, trading on centralized exchanges using their liquidity is probably like much better at this point, like rather than trade on DXs. So, but yeah, maybe Nathan, you can add something from the DX side as well.
Yeah, I mean, at this present moment, considering regulations, it's almost impossible for any institution to touch crypto because they can't really hold on their balance sheet. So companies that like you guys who can aggregate are sort of, this is a weird way of thinking about it, but pushing against a tide, because if you're thinking that decentralization is a wave, and you're trying to say, hold back, we're going to let the centralized institutions come in to touch DeFi in a wrapped way where you're either adding KYC or you're adding checks. I mean, if you look at the recent trade, I don't know if it was JP Morgan or Goldman Sachs, but they did a trade on Aave recently. But it was a centralized version of Aave with KYC and wrappers, and they did it through the mass entity in Singapore. So it was DeFi, but it was entirely centralized. So it's sort of, not necessarily picking a side, but just aligning with one more. Because for any company touching institutions, you have to be centralized, right? As you said, a government can come to you and say, hey, what's happening, what's up, and then you can give the records and you can verify everything. So in that sense, the analogy I'd use is pushing against a tide.
Yeah, I can see that. I think that what I choose to see it as is kind of like a step on the way. So instead of there actually being this wave of institution moving towards in some way being able to use DeFi, for example, or trade on DEXs, I think that we're kind of a stepping stone into that.
Then do you think the business model still stands up when regulations change and allow for DEX institutions to trade with DEXs directly?
Yes, so I think that our plan and our strategy is definitely not to promote centralization as some kind of solution to everything and how it should always be. We're constantly looking at how to include like more decentralized products into our centralized platform. For example, we're looking at self-custody, even though you use our centralized platform. We're trying to connect debit cards to your self-custody crypto assets with us. We're looking at how to include or to integrate staking and so on. So what we want to do is kind of, I feel like Nordark is kind of aligned with how far institutions have come and how decentralized they are today. And we definitely want to grow with them into decentralization rather than stop them and say that centralized is the way, you know.
Sure, but if they're going through you, that means your company's a middleman, right?
Yes.
And that's centralized.
Yeah, now. But reality is centralized right now for institutions that want to access
Yeah, exactly.
this. So,
but that's what I mean. So does the business model hold up when they can access it directly? Like all companies that are trying to...
I mean, the simple answer to that is we're not going to have the exact same business model when that happens. So that's what I was trying to convey, that we want to develop with this market and with access to DEXs and so on. So yeah, we definitely want to always be one step ahead and make sure to
that makes sense.
Yeah.
I was just going to pick up on your point around, and you're right, institutions don't want to hold raw crypto on their balance sheets, but that's why things like, you know, the Bitcoin ETFs and, you know, exchange traded products and the like are so important, because they're kind of baby steps towards things evolving. So yeah, interesting to see anyway.
So there you go. We've got time for a couple of questions from the audience if anyone wants to ask anything. We've got a hand straight up here. I don't know if I can, maybe I'll just come and give you your mic.
Hi, Monica here from One. This question goes out to the panel. With the recent challenges facing crypto businesses right now, especially with banks becoming uncrypto friendly, most recently, how are you overcoming? What is your biggest challenges in the trading industry, and how are you overcoming it?
I can start that initially. I'll probably go around the panel, but yeah, that's a great point. I mean, the two biggest challenges we've had are, well, three biggest challenges probably. One is recruiting good tech people when you're competing with Google and Meta and everyone else. So it's always a challenge to get really good technology people in particular. But also, I mean, regulation is a huge challenge. I mean, you know, it took us 2 years to get regulated from start to finish. And if you're targeting institutions, you have to be regulated. And so that's a challenge, which thankfully we're through, but we're only regulated in the UK, and we're now trying to get regulated in other places. So there's that kind of ongoing sort of expansion of that regulation around the world. And the final thing is, banking. I mean, you know, we had US banking facilities that disappeared, and thankfully we've managed to put replacements in place, but banks seem to be coming and going, particularly for USD all the time, and we've probably got 50 odd banking applications out there at the minute. We now have a constant sort of activity of making sure you've got multiple banking facilities in place. So.
You need a bank for your passwords for the bank.
For a DEX, it's not really a concern at the moment, but I'd say it's more of a concern for our users. And that's just, I mean, you can still use exchanges like Kraken or Coinbase, whatever, but it just means that the model can't be decentralized. When there's no, at some point, if a DEX could open up its own banking rails, where you can off-ramp and off-ramp directly through a bank, maybe using MoonPay like Uniswap does, but that's centralized. If you can do a decentralized payment processor to get off and on the DEX and then trade it on the DEX, that would be perfectly decentralized. Now it can't exist, now it won't exist. So again, if you're thinking about, if I say electric is fully decentralized, I'd be lying, because users can't come on board unless they're going through a centralized option. So that's what I mean, that it doesn't really exist in the space yet. It's just an idea and an ideology.
Yeah, I would say from my point of view, and what we've seen with Mercury, with the redundancy of centralized exchanges with banking infrastructure, payment infrastructure for the last few quarters, is huge, and this is a big problem because of people can't really move money in and out exchange. Exchanges can, held money, stop withdrawals for this reason as well, because they don't basically have a channel for off-ramping money from exchange. So this raising huge concern for users. Shall I trade over Coinbase, or shall I go to electronic or any other decentralized exchange? Also, like regulation, for sure, like a big problem. The lack of regulation, I think, in the US, Uniswap and Coinbase, with the recent examples, they pushing like this stuff. They're doing a great job in order to promote this kind of approach for all other countries, to have this kind of open dialogue and open mind kind of mindset with regulator. But probably we should wait some time. We should probably educate our users. Do a lot of stuff around conferences, meeting people, meeting builders, and education is a big thing. I think it's one step more to be fully regulated. And the question of regulation: shall we regulate everything and ban everything that we don't understand, or we don't have enough experience, or it's like more probably about like having more people involved into this conversation with the the same experience.
Awesome. I think we're being ushered off, so that's all we've got time for. But can you put your hands together for our amazing panel? Thanks so much for joining us. And thank you everyone for coming. Really appreciate everyone being at Zebu Live from the bottom of my heart. It's great to host you guys.